I don't think you should lose in this type of learning environment. You're all sitting here at keyboards right now, just working without doing a lot of what I would say is cognitive reflection on the learning process. What is it that you're going to do? My philosophy of business problem solving is always about finding patterns, recognizing them, and then implementing a repeated set of solutions that work. For these types of problems, for me, if I was you, I'd be taking notes off to the side somewhere that wrote down, what's the first thing I do? What are you going to do when I show you this on a test and you don't have the PDF to look at? You don't have any idea what the answer is yet. You have to disassociate yourself from the fact that right now I'm trying to teach you how to do it, not just how to get this right answer. So the first thing I always want to do is write down, what is it that I know? What is it that I'm going to assume in doing this problem? And as I read this, I'm going to find a number. I'm going to try to label it because I'm going to use numbers with labels to develop a solution. They may or may not look exactly like the PDF that I built because every time I do it, it could be a little bit different. So here's the first thing I do. I'm thinking about expanding my consulting practice to add more employees. How many more employees am I going to add? There's going to be 3 new folks that I'm going to bring on. Each employee requires, E is the word we often use to shorthand employee. Each new employee requires an investment per employee of $50,000. That way, if I wanted to know, what is my initial investment, I could put it right here and ask myself, what is it going to cost me to go ahead and bring on 3 new people? This is also a life business lesson you all need to understand is when you are going through the hiring process with a company, that process costs them money. They don't want to have to do it more often than not. That's why they love to hire you as an intern and then keep you as a full-timer. So they don't want to have to go through the process all over again and spend another 50 grand. So you can use that to your benefit by once you've got your internship, showing them why they should hire you. And your goal should be to get a job offer out of your internship. Assume that all happens in period 0, which means I'm going to go ahead and have to write a check for $150,000 right now to thehiringauthority.com. What then do they get? They are all going to get a salary. I'm going to do A for annual, and that's going to be $75,000 then is their annual salary is what Indeed.com will show me. And then I'm going to say you're going to get a raise annually, and that's going to be 5%. And if I wanted to, I could say, that's starting in year 2. You don't get a raise before you begin working here. Then on top of that, I'm going to have to hire you benefits, which annually, once again, is going to cost 15% of your base salary. Why I am doing this is for the benefit of revenue growth annually of 10%. Gosh, what is that button I always press that makes that research thing come up? Alt H N G, enter. Give it one more decimal place. Revenue growth 10% annually. That also will start in year 2 because my revenues in year 1, highlight the 1, shift left arrow once, should get me over this 1% right here. Then if I go to my format cells, I can make that a subscript. That makes it cutesy little revenues in period 1. And that's the whole reason I'm doing this thing is so I can hire out my 3 new employees and generate a new $350,000 in year 1. I have to pay a tax. Yesterday was, of course, tax day. So that was the day that all of us go, I can finally stop worrying about that and paying extra money for that above and beyond, which I already paid. I had to teach my daughter again, who's 20, how her tax calculation happens because she has 2 jobs. One of the jobs, like if you work on campus, they go ahead and they withdraw federal tax and they pay it on your behalf. The other one's a 1099 independent contractor. She doesn't pay tax on that. So when she gets her tax bill at the end of the year, she always owes hundreds of dollars because she forgets that that one, job 2, doesn't take tax away. So yesterday is a horrible day in her world. Not as bad this year because I taught her how to accrue. But then this one rate, which we call discount rate or opportunity cost of capital, this just means what I could do instead. Instead of spending this $150,000 right here, couldn't I invest it and just earn 15% without having to hire anybody? I could just have a normal week consulting practice with no extra employees, no extra revenue, or I could invest. And if I invested, now I don't have to manage any of you or hire any of you. It could be a lot easier for me. But if I just chose to invest only, I'd want a return. And the return I would demand that's equal to the risk of taking on new people, I've ascribed as 15%. So now let's go ahead and calculate the NPV and IRR. Step 1, I read this problem a bunch of times. Step 2, I started documenting all my assumptions by label everything and putting numbers with it. The new step 3 we have to do to solve this problem now is, since I'm not given just cash flows, I have to produce a statement of profits and losses to determine, is this thing even worth it? And the statement of profits and losses goes way back to our very first assignment where we looked at revenues. And from our revenues, I can make that all caps, we then subtracted expenses. Some of those expenses were like cost of goods sold. That when we took revenues minus cost of goods sold, we get this thing called gross profit. From gross profit, we take out this thing called SGA. SGA, sales, general, and administrative, gets subtracted from gross profit to give us something called EBITDA. From EBITDA, then, we go ahead and subtract off depreciation expense. And from all H6, missed twice, there we go. From EBITDA, we subtract off depreciation expense till we get EBIT. From EBIT, we subtract off interest expense. And interest expense subtracted from EBIT gives me EBT, earnings before tax, from which I take out my tax expense then, and that leaves me with earnings, or sometimes called net income, or what you probably learned in micros is profit. This is a profit and loss statement. So the profit and loss statement is generally then augmented by who is this for? So this is what I am considering my consulting practice. So the business is going to be my consulting practice. And then there's always a timestamp. So these are for the year ending, and my years will end 2022, 2023, 2024, whatever it is in terms of its particular year. And then I'm going to have to do this for a certain number of periods. When I project income statements, whenever I have to do an NPV and IRR analysis, which is what they're asking me to do at the end of this thing, I always like to reserve column B for the numbers that I use in my assumptions, and then for what we call period 0, the period that I'll make my initial investment. So because of that, I like to start my projections, in this case year 1, in column C, and then this is one of the few times that I use the actual mouse to drag across so that I can tell you what my profits and losses would look like for the next 3 years. Now I've got that, I can go ahead and do my centering here by selecting my whole area and then doing format cells, alignment, center across selection, so everything looks schmoopy right across the top. And then we can project step 3, our income statement. Just like we did on assignment 1 then, in year 1, I'm going to have revenues that are equal to $350,000. Those revenues then into year 2 should grow by 1 plus the revenue growth rate that starts in year 2, so that I take previous year multiplied times 1 plus growth rate. In the second year, I should have $385,000 worth of sales. I know that that 10% stays constant. So if I want, I can go back over here, do my little F4 magic. It's going to leave C25 alone so that when I copy and paste, the C that was here should go to D automatically, but the B16 will stay the same so that when I copy and paste in year 3, year 2's $385,000 of sales grows at 1 plus 0.1 or 110%, so that by the end of year 3, Maku and company are now generating for me $423,000 new dollars every year. But it costs me to have these folks. Specifically, I have $75,000 worth of expenses per employee multiplied by 3 employees. And if I just stop there, I would see that I have $225,000 worth of costs to pay them. But I know that in addition to paying them, I have to pay for their benefits. So I'm going to add on to that. I need to take $75,000 multiplied then by 15%. That will be the benefits costs. Multiplied by 3 employees tells me that when you add to their benefits, it goes from 225 to 258. I got another at least $30,000 in benefits. If you're uncomfortable with the way I did that formula, one of the ways that I've preferred to get better at Excel over time is by doing the please excuse my dear Aunt Sally stuff by myself. So if I put parentheses around these, maybe it makes it easier for you to see that what that says is B13 times B10. B13, 75,000 times B10. That's my cost just for salaries. Plus, add on to it, B13 times B15, 15% of this multiplied by 3. And then that way, I have my total costs. What do I know about that then? Well, these salaries, and if I know that in year 1, it's $75,000. What will it be in year 2? I promised Maku and company I would give you a 5% raise. If I go ahead and fix that number again, because that raise is going to stay constant, it will tell him in his second year of working here, he should be making $78,750. And by the end of his third year, if you take his previous year $78,750 and raise it up by another 5%, by the time he's 25 years old, he's making $82,867. Let's just for the sake of argument, do this one again so you could see it using please excuse my dear Aunt Sally. Equals, open a parentheses. I have 3 employees. That number doesn't change. This time I want to multiply it by the 78,750. That number is going to change. So I'm not going to do the fixing thing. Close parentheses. That will be just salary costs. Plus, I take that same 78,750 that will change. I multiply it by that 15%. That's the allocation of costs to benefits. That number is not going to change, so I'm going to go ahead and lock that in there too. And multiply that then by my 3 employees. Also that number, oops, doesn't change. What did I hit? F4 here. There we go. So in year 2, the smell test says my costs go up by another $20-some thousand. on the cost of goods sold front there. Does that number match? Is anybody cross-checking the PDF just to make sure? I'm good. Thank you. Okay. Now let's see if I did that right. If I'm smart, if I just copy and paste that across, if I did my references right, it's 82,670.50. Look, B10 has 3 employees fixed times E13. That's my newest salary amount. Plus, again, E13, this times the 15% times 3 employees. So my gross profit, all HBO, little line underneath, equals revenues minus cost of goods sold, enter, copy, paste, so that by the end of my 3rd year of employing you 3 new people, I am generating over $138,000 new dollars that I didn't have before. SG&A would be something if, for example, what if I had to have an office for you to work in? And I got to pay rent somewhere. And while you're at that office, now I have to have liability insurance in case you fall down the stairs while you're at work. And I got to pay for an IT person to make sure that the Wi-Fi is working there. And maybe I pay for your cell phone for you or any of those other support costs to have you. This is where your generation is going to see a change in the way we compensate you. When I worked in consulting, they paid for our cell phones. We used to get little things. This is like, pre iPhone days where you would plug this thing into the side of your computer and it was mobile Wi-Fi. They would pay for that. They would pay for your cell phone. They would pay for your transportation to work. Like they would pay when I parked in the Hancock building. You get to work at home. I pay for nothing, but I'll pay a higher salary. And then you got to pay for the things on your own. So for this problem, I believe I'm not paying you anything else. So SG&A is just going to be 0. So EBITDA is always then gross profit minus SG&A, copy, paste across. And so EBITDA is a favorite number to us in finance because it means here's how much new cash we really make. Once we pay you, we pay our vendors. This is what we have to play with. Depreciation is a funny one for us here. Depreciation applies to capital expenses. We did depreciation extensively when we talked about Cam's batting cages. We're going to do it in Lily's loving laundry. People don't depreciate from an accounting point of view. Trust me, your body depreciates from a physiological point of view. If you don't believe me, you can take a picture of my knee and look inside and see the metal that now exists there because my old bones have been cut out because they depreciated to non-usability standards. But for us, from an accounting point of view, then EBIT is just equal to EBITDA minus depreciation, bless you. And so again, I didn't have to borrow to take out the $150,000 to get you to come work for me. So I have no interest. And one of the joys of a consulting practice is a lot of your revenues after you pay your people drop right to the tax line. The consulting business I run, we started on assignment 2 looking at ratios. We looked at a ratio called like the net income as a percent of sales ratio, just the profit margin. When I do an hour worth of consulting, I have to pay myself, and then I have to pay for my internet, and then I have money left over and they tax it. So that by the time I get down to how much profit do I actually make from $1, my consulting practice makes about 83 cents on the dollar. 15 of those cents are taxes. I'm paying 2 cents just to actually run the business. I pay 15 cents for the right to be an American who has an S corp. This is one of the reasons, if you want to look it up, you want to make consulting revenues for me, look up how I established digital citizenry in the country of Estonia and can assign my corporation legal status there so that maybe I can pay 2% in tax instead of 15% in tax. That would save me 13% in tax every year. I'll give you 30% of that every year if you can figure out how to do it. Because instead, you are going to pay taxes, in our case, equal to, I make that $91,000 new dollars. But in this one, I get off lucky. I'm only paying 20% in tax. I'm going to fix that right there because the C34 reference, the C is going to go to D, is going to go to E, but the B is going to stay fixed. So we copy and paste that across. And at the end of the year then, by having you as my new consulting partners, I should have from 73,000 up to 110,000 new dollars worth of profit every year in my business by having 3 new employees there. Brian, am I good there on that number too?
Yeah, you good.
Thank you, sir. Appreciate you. So that's the second thing I got to do is I run it through like an accountant would and just ask, is there profit in that? But to me as a finance person, or if you want to join the club, finance person, that's an insufficient analysis. My thinking goes to a deeper level because it includes the idea of opportunity. I don't have to do this. I have access to this $150,000 sitting right here. And I have a choice. I could do something else. So the only way I'm going to hire you instead of just investing is if I think you can make me even more than the investment would. Way that we do that in finance then, and I'll go ahead and we'll put a little Alt-HH here and make me little colors, give a separator line over there. Maybe we'll put one over here too so it looks a little bit prettier, like we're breaking things up into pieces. Maybe stick one right here too while we're at it. Now things are starting to look schmoopy for me. Excellent. The next step then is to do your NPV model. When you come to do this final exam for me, this stuff you have to know in order. You've got to be able to execute it on the spot. So what do? I've got it memorized. I suggest you do the same too. The whole thing is about getting me cash. Who's king? I want cash to come in. What do I got to do to make cash come in though? It costs me. So I have to have cash flows that go out because I'm all about figuring out how much my cash flows are net. Because if you take what I get in less what I put out, that's how much I'm going to have left. After I know what I have left, then what I have to be able to do is say, what would that be worth to me today? And then sum those all up so I can figure out the aggregate present value of an investment opportunity over its costs, which should allow me to calculate the IRR. To do all these things, I need to be able to do it over a certain number of periods when I have a rate to use. So this is what I suggest you memorize. An NPV is cash flows in, cash flows out, cash flows net present value, and IRR based off of periods and a rate. And my periods start at period 0, and they will last through period 3. Alt-H-F-I-S, enter, Alt-H-A-C, Control-S. A rate is a constant, as defined for me up here, 15%. I want to stick it in rate form while I'm down here. How do you kick this project off? It's going to cost me right now $150,000 to hire those 3 people, which means I am out, cash flows net, $150,000 to begin with. Cash flows out is in minus out. Now I'm out 150 grand, so what do you do for me? You bring for me then in year 1, 350,000 new dollars. It's then my responsibility to pay you and your benefits. It's my responsibility, had I chosen, to pay for the rent in your building that you work in. It would be my responsibility to pay the interest on that debt if I had taken any. And it is my responsibility to pay the tax bill. So to be an employer, I have to do all those things, which means my $350,000 a year revenues cost me $277,000 in cash. Notice my net income or earnings is $73,000. I don't care about net income. I'm not an accountant. I'm a finance person. I care about the king. To me, the king is cash. So what this means to me is if, again, the ins minus my outs in year one tells me that right now I'm going to make $73,000 additional dollars. In this case, they match because I don't have any depreciation, which kind of stinks. I wish people depreciated. If they did, and I could put something like $40,000 up there, look what happens. Like I would get even more cash. I have less profit. I don't care about profit. I care about cash. But since I can't depreciate people, I got to leave it as it was. So if I just did it like this, would you spend $150,000 today to get $73,000 in 1 year? No. Look at the bottom. The sum of that is negative $77,000. Why would you just give away $77,000? And the answer is you wouldn't. You would do this and have people work for you for 3 years total. Such that if you just looked at a 3-year basis here, check it out. $150,000 originally spent yields me $274,000 over time. So if you put it all together, it's like I'd make $124,000 more dollars. The problem with that, though, is some of the dollars don't come until a long time from now. So they're not worth quite as much to me today. To these, I have to apply a present value. So if I look at a rate of 15%, fix it. It's not going to move. And then I look in each of my relative periods, 0 to 1 to 2 to 3, and I have no payment, so comma, comma, and I get to the future value box. The future value is my cash flows net. So how much is the present value to me of $150,000 spent today? It is $150,000 spent today. Because Excel doesn't do it the way I like, and I want to show it differently on that present value line only, I'm going to hit the negative there, because this to me says something more valuable algebraically. I spend $150,000 in present terms. It seems like a lot of work to get to the same number, but this is my initial investment. It yields for me then as follows. Follow along. If my rate is B40, 15%, and in C39, I get 1 year from now, how much future value? In C43, $73,000. But because I have to wait 1 year, that $73,000 is only worth like $63,000 to me today. Because I built that formula so nicely, when I copy and paste it, I should have the ability to tell the same story. Alt-MF. When my rate is still B40, but my periods are now E39, which is 3 periods away, if I get E43, $110,000 at the end of the 3rd year, that's really only worth $72,000 to me today. See that giant difference? Put it all together by summing the present value of my initial investment plus the present value of those 3 future cash flows net. I see that I have Alt-HBA, Alt-HB, Alt-HH. Alt-HH is yellow. Can't find the yellow. I should change it. I have a positive investment return of $54,000. And the way you conceptualize that is basically this. $150,000. I could hand it to you right now. And you would turn around and give me $204,000 right now. Doesn't that seem like a good idea? I hand someone 150 grand. You hand me back 200 grand. I would like for anybody in this room to do that. We meet in the hallway. We can do it right in front of everybody. That's the theory. The application is you got to hire 3 people. You got to put them to work. You got to sell the projects. You got to keep giving them raises. You got to retain them. You got to give them a raise. And if you can do that, at the end of 3 years, it's like you made an additional $54,000 like that. The very concept, and people don't talk in that terms, is IRR. IRR stands for internal rate of return, and it just means what do we think the rate of return on this project is? I demand 15%. What is this one? If I use equals IRR against the cash flows net only, what I can do is then tell you this project makes like 34% returns. If the risks were the same, what would you rather make, 15 or 34%? I agree. My numbers work out?
Yeah.
All right, last thing to do then here is just make sure everything looks good when we print preview it. Right now, I believe if you do it the same way I did, you should be able to sneak it all in on just one page. If not, what I would suggest is leave this one portrait and just fit it. And that should give you everything you need there. Okay? So there is number 3.